literally just had his 18th birthday, and thanks to the strong support that he has amongst his family, they guided him through in terms of making sure that they jump into the property investment space.
Valued at $550K, I
Yeah,
believe.
around about.
So that's almost $110,000 worth of growth in less than 12 months. Metrics are that we have over 95% of properties secured off market. So Jad, 2025, what a year for Citadel Agency.
Yeah, it's been a great year, honestly. It's been fantastic.
It's been a fantastic year. Lots of growth to the organization, more staff, more opportunities. I think that we've definitely had leaps and bounds in terms of the company and where it's currently at and where it's currently going. We've had lots of opportunities for our clients, which has been incredible to see from where they were to where they've now have become. For us, I mean, as buyers agents, it's so exciting to see people's wealth grow and putting them in the right locations.
Yeah, absolutely.
How's your take been over the year, man?
Look, it's been full on. At a personal level, I had my third child, and business didn't stop, and that's been a massive learning.
Yeah.
Usually in corporate, I would have probably taken the back seat, just because of paternity leave and all the rest of it. Not a luxury business, which is a privilege as well. But it has been a very fast-paced year. And if we look at where the investment or the property investment landscape has been, it's shifted quite dramatically. We've seen markets increase, markets start to see a night and day shift in terms of buyer activity, especially when we start talking about, say, regional Vic, regional New South Wales, and the North Shore of Tassie. So there's been massive shifts in those markets, which has been really exciting to see and play in nice and early, whilst other markets, just when you think they're about to tap out, they still continue to march across the finish line and show what the industry is calling a second wind, where it's like a rejuvenated second lease on life, and property price growth continues to not only grow, but also accelerate in some instances as well. So it's been a very eventful year, I would say.
Yeah, awesome. And so the last year, I mean, we've had a number of clients that have done exceptionally well. And I want to touch a little bit on that because I think it's important to bring people in to the results that we're achieving factually, not just talking about it willy-nilly, but actually showing them the data, showing them, what it looks like in terms of results and growth over the last year. And so, over the last year, of course, we've been moving from region to region because there has just been so much moving parts and moving markets and timing the property cycle correctly to be able to get our clients the most growth that they can possibly achieve. But how has it looked like for us? I mean, where have we started? What are we doing now in terms of the regions? I mean, we were focusing on about maybe 2 or 3 at the start. Now we've got a handful. I mean,
correct.
Walk us through it.
Correct. So I think if we cast back to January of this year, we were playing in far north Queensland. There was a lot of really good buying there. We always spoke about there are so many places in far north Queensland to play, but we doubled down on the one area. We did want to invest on the relationships there, go and visit those areas, broker strong partnerships with building inspectors, property managers, which have grown to be good friends as well. So I think that's been a really good indication. In January, though, when we were playing in Queensland, the market was fierce. I mean, the on markets, we were seeing properties sell well above agents' expectation. And that's a big thing. When agents, and we're speaking across the board, and they're all saying the same thing around, these properties that are probably averaging, or at the time they were averaging around about the 550K range to sell for an additional 50K above their expectation, tells you a lot about how that market was heading. So, but not always the case. So there was one of my favorite purchases this year in far north Queensland was one in Rasmussen, which is a lower socioeconomical area. It's in Townsville, probably a little bit far off the center of Townsville, but because of the scarcity and demand there, scarcity and supply, demand was quite fierce. That's not only because of investors, which is contrary to what people think. There were actually a lot of owner-occupiers buying there as well. So very diversified and healthy buying, I would say, mix there. That one property that we picked up though was the very select few on market properties that we do,
Mhm.
and for good reason. So, firstly, it was priced considerably well, and the campaign at the time was not as best positioned for this property, which, as buyers agents, you know what they're looking for. That can signal a really good opportunity. Reason being is because the agent led with the fact that this is a bank repo.
Yeah.
And when you did speak to the agent, she was a little bit half hearted because she didn't have all of the necessary information. So, if you can imagine her copying literally 30 or 50 calls, 30 to 50 calls within the campaign period, and that was her sentiment, it's going to put off a lot of people because, well, firstly, they're not expert buyers. They don't know how to navigate not only the conditions, but also how to best position for the win with those types of transactions.
Which is the repossession that,
Yeah,
unfortunately was a bit of a sticky situation.
it
And
was.
there was no clear guideline as to how to actually buy the property. Even the agent was sort of learning in terms of what the vendors wanted to be able to sell it and who was actually involved, because I believe the bank was actually
Yeah,
even
that's right.
involved
So
in
you had
that.
to run it through the bank's
Yeah, that was a
valuations.
very interesting one, actually. Yeah.
Yeah, but having said that, after navigating it carefully, and we spoke, of course, we had good conveyancer that we were working with up in Townsville, and we basically strategized before we stepped into it in terms of what our negotiation strategy was going to be. There were other buyers in the mix, but because our terms were sharper, without putting unnecessary risk on the buyer, we're able to secure it for a steal at 420K. Now, that was a four better one bathroom at the time.
How big
Done.
was the land?
It was, I think, punching in the sevens,
700. Yeah. Wow.
700. So it was
Okay.
quite
Good
significant.
buying.
Yeah, really good buying, really good buying. The comparables at the time were at around about the mid fours. Now, fast forward to where we are today,
Hmm.
and
And when did you purchase that again?
that was in Rasmussen.
That was in Rasmussen. What time period?
Early Jan.
Hmm.
So in Jan. Now, what was great about that one is, and I mean, the clients that we were working with, he was a young man, literally just had his 18th birthday, and thanks to the strong support that he has amongst his family, they guided him through in terms of making sure that they jump into the property investment space, because as we know, timing could does compound and positions them well into their retirement.
Hmm.
We kind of jokingly say about this client, he'll be able to retire much earlier than he even expects,
Yeah.
which is great because he had that guidance and he was able to make a move pretty quickly. So fast forward to where we are today, that property is very easily punching into the mid fives, and we're not even done with the end of the year, which is exceptional. And what's great about the client that we're working with, he'd give me a buzz every 3 to 4 months, in gobsmacked, not believing just how much growth was happening at the moment. And, who's pretty cluey. So who was always touching base in terms of what comparables were selling in the area. And, even till now, we're still seeing the increases with that property. And they're actually looking to go again as well,
Well, they
which we're
actually did
representing.
sign up with us again,
Yeah,
and
that's
they
right.
are purchasing the second property. I think it got valued at 550K, I
Yeah,
believe.
around about, around
Yeah,
about.
so
So
that's almost $110,000 worth of growth in less than 12 months. And that client's super happy, looking to purchase again. And we're taking him to a whole different region this time.
yeah, correct. You want to
Um,
diversify as best
yeah,
as
we want to
possible.
diversify as best as possible. That's awesome. And so that's a client straight off the bat, 18, first time investor. And this is some of the results we've been achieving for him.
Exactly. Established. It was basically a plug and play. So you already had renters in there, which is awesome.
Hmm.
And it helped balance his books in terms of the interest that he was paying, but also the rental income that he was getting in. So a win-win story there. So,
Love it.
look, I've shared with you one of my favorites from the start of the year. I mean, what was yours, Omar? I'd love to hear some of your battle stories on the ground there.
I mean, I love all of them, to be honest,
Mm,
because every single one of them highlights to me what impact I'm having in terms of my clients, growth. So each and every one of them holds a very special place in my heart and is a very special story. But I think one that really stood out to me was a property over in Douglas that we purchased for a healthcare client. This property was sitting on over 500 meters square block. It's a corner block. The requirements for the client was, I want to buy near a hospital and I want to buy near a university. And so at the time we were investing in Townsville, and the area Douglas does have both of these, brief requests, down the road essentially. So we fostered a good relationship. There's a good agent that I deal with there, and basically, I call her the Queen of Douglas, to be honest,
Mm,
because she basically has the
should love
highest
to
rent
hear
roll.
that. Yeah.
Yeah, yeah, she has the shadow. She knows who she is. She has the highest rent roll of properties in Douglas, and does extremely well when it comes to finding off-market opportunities. And of course, our metrics are that we have over 95% of properties secured off market. So we're getting access to these off market opportunities. They are exclusive opportunities, and this property popped up, and it straight away rung opportunity bells in our ears.
Yeah.
So we did the DD on it, of course. Our terms were clean. We ended up purchasing this property. It was quite comparable at the time for about 620,000. We actually purchased this property over in August this year. Now, although property cycle wise, Townsville is getting that second wind of growth, which means that it is doing everything that you want in an area to do. On the property cycle, it's probably more towards the 8 o'clock mark, which means that it is nearing that stagnation period, but there is a lot of growth to go. We bought the property for 620,000, quite comparable at the time. And if you fast forward now till today, December 2025, we're already seeing growth of upwards of $50,000. Now, the property was purchased only 4 months ago, and you are seeing $50,000 worth of
Yeah,
growth.
that's around about 12.5K per month. And the great thing about that property as well, literally on the same street, inferior block size. I think it was smaller by around about 50 meters squared, whilst it had an extra bathroom, I believe. It was punching in 80K more than what we purchased this property for, which, even after you carve out some of the value add that that other property had presented, this property still stacks up really, really well, and was a good comparison for us to kind of celebrate there. And so yeah, he was quite
He
happy.
was wrapped, yeah. Healthcare professional, doctor that didn't have time to purchase, anything on his own, time period. So he was looking for the professionals to be able to take over and basically do the work for him. These
Yeah,
professionals are short on time. We deal with them all the time. They're looking for highly experienced professionals that know what they're doing. That's when he came to
yeah.
us, and we sort of briefed him in on where we think there's a lot of value in the market.
And tell us how you found the Queen of Douglas and how. Well, firstly, why would she preference putting a property forward your way if she's working with like probably a couple of dozen buyers agents and investors?
Yeah, well, it's interesting because she actually sent out an email accidentally. And I mean, a lot of agents send out emails accidentally with a full list of the buyer's agents that they deal with, and
All
there's
right.
normally hundreds.
Yeah,
So
right.
for us to be able to cut through and work with these agents and have our results do the talking for us, that's the biggest differentiating factor. So for us, it was we had bought a number of properties through her. I actually purchased my own property through her, and we acted in a matter of 24 to 48 hours. Some agents really love that and highly regard it because it means that they are acting swiftly. The vendor expectations are met, especially if the vendor is trying to get rid of a property quite quickly. But most importantly, she's not going ahead and selling it twice, and she knows that. So through our experiences, our results did all the talking for us in that instance. It was a no-brainer for her when it came to buying the property and
Fantastic.
positioning an offer to her with clean terms.
Fantastic. Now, Townsville does get a bad rap, especially because of its climate there. It's quite hot in the summer, can flood, etc. So, of course, that was all part of the due diligence.
Yeah, absolutely.
Douglas, I believe, was also a little bit more elevated as well, which certainly helps. How are
Yeah.
the insurance premiums up there? Do you recall?
Oh, I mean, yeah, absolutely. The insurance premiums are higher because there is flooding and some risks associated to the area. But I mean, it comes with the benefits of how much capital growth is there going to be within that given area. And I mean, if that far exceeds the amount of cash outlay that you're putting towards a property per year, dollar for dollar value, does it make sense?
Yeah,
Absolutely does. So
that's why it's an objective exercise, and
yes,
sometimes I get a little bit irked, especially when you consider that people are still living, and lovely people, by the way, Townsvillians or whatever.
that's a nice one.
Yeah, I don't know if that's what they call, but they're actually quite lovely people, very friendly. Even the agents there, funnily enough,
Oh, the
they're,
agents were
they're
fantastic to work with. I think they are super chill. looking for someone that just backs what they're looking they're saying, and that's what we do. So it works
Exactly.
hand in hand with how we operate.
But we got to remember, I mean, look, of course, the due diligence process is critical to get right. You don't want to buy in, say, the West End area, which is very receptive or susceptible to flooding, I should say. And Douglas, on the other hand, is quite safe. More recently, as part of the flooding there, Douglas, certain pockets of it were void of any of the pink or the black zones, which is great. And so that was part of the due diligence that had occurred. But we also got to remember people live there as well. So there is still a market there,
Yeah,
quite a resilient market.
the owner occupier market. I mean, it's one of our data metrics, of course, to see how many rent versus owner occupiers there are within a given area. And
Yep.
I mean, for Douglas, Annandale, although there are a lot of students or there are hospital employees there, there is still a huge amount of owner, occupiers that are looking to live in the area because they wanted some sea or tree change. Especially people living in capital cities that wanted to head over there just because of the great weather as
Well,
well.
it can get stinking hot
It can
though.
get stinking hot, of
Yeah.
course, but I mean, great that we live in 2025 when there's air conditioners, right?
Yeah, yeah, that's for sure. That's for sure. And yeah, avoid the water there because of the crocs, apparently. Even though I didn't see any when I was there, but anyway, one day.
Anyways, that's all right.
Um, but no, look, I totally agree, and I think we're also forgetting it's one of Australia's biggest garrison cities as well. So defense there is front and center. While I was there, as an example, you'd be walking around and you would hear like screaming out of the announcements. I think what it sound like a drill sergeant, or maybe I've been watching too much Platoon or something like that.
Probably.
So yeah, or listening to too much of David Goggins material. But anyway,
Yeah.
um,
We love some David Goggins, don't we?
yeah.
Well, talk to me a little bit about some other areas that you've invested in, some highlighting factors. What were some, standouts for properties that you purchased in 2025? Other than Townsville, we know Townsville, like the back of our hands, done extremely well. What are some
Yeah,
other regions that you played in this year that exceeded your expectations? Um,
yeah. I think one region that comes to mind is when we were playing in the west side of Melbourne, so Hoppers Crossing, which we know has very strong density, very strong population growth into the future. We actually done the very um, one of the select owner occupier briefs there, although we don't do them actively, but they were a lovely client that were representing at Hoppers or in Hoppers at the time that they were looking to purchase. We'd done all of the due diligence in terms of bang for buck, where can they achieve best property investment purchases, all whilst ticking the boxes required for their owner occupier needs. So at Hoppers, we were campaigning there for quite some time. And what fascinated me, firstly, the quality of the homes, but also Hoppers is very unique where it has markets within markets based on school zoning, based on estates, etc. So it was really good to get across that information. A lot of different property assets there to be mindful of. We ended up securing a property. It was a three-bedder, one bathroom there. Um, it wasn't off market and was very competitive, especially considering that we weren't even the lead offer at the time.
that's
But
right.
because how quick we were to make a decision and find measures that appeal to the vendor or conditions, I would say, that appeal to the vendor, we're actually able to secure for 601K, one of the very select few freehold properties that you can actually secure close to the high fives. And the lead offer was actually at 609K, but because they were not as quick to the table as we were, and we cleaned up our conditions, we came in for the win, which was outstanding. So our clients done really well with that one.
Sydney side investors.
Yes, that's right. There were Sydney side investors. Sydney siders do have a different baseline to us Melburnians. They've, as a region, have seen a lot of capital growth in terms of their own asset holding, etc.
The
Um,
affordability is just too far high in
yeah,
terms of what they can afford versus what money can buy in
yes,
Sydney versus in Melbourne. And I
correct,
think we were actually inspecting a lot of properties during that period for our owner occupier clients. And when we'd rock up, we'd see a lot of buyers agents on the ground representing Sydney side investors
correct.
because they're just priced out of that Sydney market.
And it wasn't just the Sydney side investors; it was the Queensland folks,
That's right.
also people in Perth,
That's right.
as well as the local market, as well as the local investor market as well. we saw a lot of value there. So there was one auction as an example where we just kind of had a bit of a sticky beak in. Um, by our count, there were 15 bidders on the table, which was extremely high, especially that auction was coinciding with a bit more sentiment or negative sentiment, I should say, around the Melbourne market. So it was really good to see that happening.
And that
Um,
period was in July, was it?
yep,
It
center
was
of the year.
around, yeah, center of the year. Melbourne had just started to bounce back month on month. We had seen, slight percentages of growth in the Melbourne market, and Melbourne had come off 5 years of a decline. Well, I mean, since 2021 peak, there was a lot of decline in the Melbourne market, and a lot of investors wanted to escape the Melbourne investment market because of not only land tax components, but because the market was declining so heavily. So a lot of these same investors went to Perth, they went to Queensland, they gained that equity. They came back to Melbourne when the time was right and started to purchase in areas like Hoppers Crossing, like Sydenham, which we've also invested in for our clients. And so, walk us through that owner occupier client as well. That was a really interesting
Yeah.
case study. I think that people would love to hear about.
So look, it is much more of an emotive purchase. So even though something from an investment grade point of view ticks all of the boxes, if it doesn't suit the family's needs, not only today, but into the future, i.e., a growing family, then it's one of those properties that you will need to pass on. So the campaigning, we probably inspected better part of, I'd probably say 2 to 3 dozen homes. That's excluding some of the online research, speaking to agents on the ground. So it was quite a heavy involvement. They did miss out because of certain properties that were just they were overpriced, or sorry, I would say the competing bidders were willing to pay a lot more
Yeah,
for, and
that's
we
right.
just did not, or we could not rationalize them spending that much, even though it did satisfy some of their requirements at the time. But the property that we finally did land on, that suited all of their requirements in terms of floor plan, where it was situated, and it was very reasonably priced, especially because there were first home buyers as well.
Just
So
to give our listeners a bit of insight into the client's brief. So, the client came to us and was in two hearts about whether they should buy an investment property or whether they should buy an owner occupier property. And
correct.
so our advice at the time was, well, how about if we find something that fulfills both?
Yeah, a bit of a
And
hybrid.
yeah, exactly right, a bit of a hybrid. And so when we were taking them on that journey, it was more along the lines of, well, this is what good buying looks like for your capacity in these areas. And this is what it could look like for you if you were to buy an owner occupier home based on your brief, um, which was close proximity to a train station because they traveled from one side of the city to the other. They also wanted to have an open living space. The kitchen needed to be a certain way. They both chefs, so they wanted a nice big kitchen to be able to both
That's right.
operate in. And so these were the simple parameters. And we also coached them through understanding the 80-20 rule, which I really love speaking about, which
Yes,
is
yes,
fulfilling 80% of what you're looking for, because the other 20% is going to spend you more time to look for than the first 80 did.
absolutely.
And so that's something that we constantly train and educate our clients on, because sitting in the market, in a moving market, especially like Hoppers at the time, was moving anywhere from $3,000 to $10,000 a month. So the more they sit in market, or the longer they sit in market, the more money they're going to have to pay by the end of it. So it was finding the right balance, fine tuning as we went throughout the journey, and finding them a property that they are happy in right now. And I think that property, if we did the valuation on it, I think
Yeah,
it's grown by a fair amount. What was that? What were those numbers
absolutely.
look
I
like?
think it's in the high sevens, despite that it's only been probably, I'd say, 4 to 5 months.
Yep.
So we can articulate a solid 40 to up to 60K worth of growth for that property as of where we currently stand. What was interesting is that there was a property down the road from that house that had sold and then resold after 5 months. And the gap there was around $50,000
And what did we
premium,
purchase that property for?
750K.
We purchased the property for 750K.
750K, correct.
And then it's currently valued at about
Yes, yes.
800K right at the
Based on that
moment.
comparable,
Okay.
especially, it's really positioned it with strength. And that was because it was a nicely renovated home in a highly sought after area. It positioned that purchase for the win,
Yep.
which was great.
Beautiful. Fantastic.
Um, but yeah, that was an outstanding West Melbourne purchase. If you think about where Melbourne's median price is at the moment, it's punching in the mill, probably a little bit of under because the market's had taken a backseat, but it's starting to pick up pace once again. So yeah, to buy something for 250K under the median for that city, all whilst being a freehold property with a sizable block of land, 4 bedder, 2 bathroom, recently renovated, is very good buying. Very good buying.
I also wanted to speak about a property that we purchased for a client of ours 12 kilometers out from Melbourne CBD. Client's brief was 3 meter driveway to build and subdivide in the back,
Yes.
with a retain and hold, retain and subdivide brief, essentially. And that client, if we walk us through it,
Yeah, yeah.
yeah,
So that client, at the time, he had a specific requirement because he had the capacity to be able to build out in the back. He wanted to secure a property either in Fawkner, Glenroy, or Reservoir that allows for purchases for a subdivision in the back. We call it a battle axe. Some people call it something else in certain states. Um, but what made that property quite appealing is because it was a near turnkey. It had the capacity for us to build out in the back. One of the requirements for the councils that we're playing in is a 3 meter clearance. So that was an absolute necessity. Once we identified that property, we were able to actually secure that one in auction. Only because when we were exploring those properties, there were some opportunities that came off market at the time, but this one positioned itself quite well. And our read of the market at that given time is that Faulkner in particular was undervalued. So when we did secure there, um, it was only a matter of time, 4 months after securing that property, that we saw a near $100,000 increase in terms of its growth,
yeah,
which was an outstanding result. And it also helped the case even further for building out in the back. Now,
yeah,
the particular thing to be mindful of with this one is you need to be very clear in terms of your feasibility. At the time we purchased, feasibility was a tick, but the fact that we were catching a market tailwind made it an overwhelming slam dunk, which was great. But yeah, you need to be mindful that when you are subdividing, there is a bit of manufactured equity pulled from the front house to be able to then um, uh,
build into
accommodate
the
for the house in the back.
yeah, and
So
I
you got
think.
to look at it as a collective project.
And when we were looking at that buy, it was specific to having a 3 meter driveway clearance, making sure there was enough land in the back, of course. Speaking to council prior to understand whether or not we could or couldn't have the right requirements to build in the back, and we secured it for 796,000 at auction. And that same client actually valued his property. He purchased it, I believe, in April. He purchased it. Sorry, yeah, he purchased it in April. Currently valued now at $900,000. So it's $106,000 in manufactured equity throughout that period, that he's now taking to actually go ahead and either buy another property or to renovate and
Yeah,
build in
it's
the back.
actually giving him options.
It's
You're
given
right.
him options
Yeah,
here, and he didn't expect the amount of growth that there is, but that's really helped him in the long run. So yeah, very, 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 very good story.
awesome.
Let's pause.
Yeah, let's pause, bro. I'm
Let's
freaking.
pause.
I need some water in me.